This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of this show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Charles Sidman of ECS Capital Partners. Charles, thank you for joining us.
It's a pleasure. Thank you for having me.
So what was your background before investing in early stage companies? What did you do before this?
Okay, well, my career has sort of spanned three different phases. I started off as an entrepreneur in the computer IT world. I built computers, so I built hardware, I programmed them, did software. I did applications which a long time ago were pretty cutting edge and today would be called AI, artificial intelligence. I've had a few other entrepreneurial ventures on the side since then. Then I got involved in biomedical research, and so spent many years in school, became a researcher and a professor. And this is basic biomedical science, genetics, immunology, things like that. I was always interested in the application of what we were discovering in the lab, so I did some consulting, and I participated in some, I think, important advances scientifically, and I even helped some patients clinically. And then during that period, I was on a sabbatical, and I met this really weird, interesting guy who, when I asked him what he did, he said, "I'm an angel investor." And I'd never heard the term before. So I learned about it, found another way to interact with and affect the world, and got more and more involved in that. So for 10 or 15 years, I did that overlapping my academic life. And then finally, I'd written enough grants and papers, and I said, I want to do this investing stuff full time. So that's what I now do today, full-time investor.
Well, that's great. So what excites you about being an angel investor? What intrigued you to get into that world?
Well, I am not only an angel investor. I certainly learned about the investing world from the angel perspective, but I was always involved with discovery and application. And that's really what excites me is startups and new companies that are going to change the world. Now, today, being a full-time investor, I do it through many mechanisms. So I continue as an angel investor. I run a fund, which we can talk about later. I've been an advocate for crowdfunding, which making some significant news just today, which is pretty exciting. I do Wall Street stuff. I do public markets. All of it is directed at participating in, supporting, and working with exciting startups and growth companies that are going to make the world a better place.
Well, that's great. Well, let's talk about the state of angel investing today, especially in the startup world in general. How do you see the industry evolving for investing in startups? What changes do you see coming up?
Well, there's general recognition that entrepreneurs and their startups are the engine that drives an economy forward. It creates jobs, creates wealth, creates a better life. That's pretty broadly recognized now. It's like motherhood and apple pie and the flag, really. But these entrepreneurs depend on and need finance and mentorship. And so that's what's really exciting. It's a critically important activity, and it's a way for people with experience and resources to participate and support it. Now, I think the biggest change in the whole startup world and financial world is probably access. Given that everybody recognizes its importance, and local governments and states and federal, national governments and all, there's tremendous resources and there's a lot of activity. And so there's a lot of activity, and the ways of accessing and participating in that are getting more and more open. So anybody who has the inclination can participate in some way in this activity. And so I think that's the plus side of the coin. It's just blossoming. In the old days, starting with the Depression, only rich people were allowed to get in. And the thought was, well, it's risky, it's dangerous, but rich people have a lot of money to lose, so we don't have to worry about them. So we'll let rich people participate in this. Now the rules are broadening, and everybody gets to participate. And so that's really exciting. And there's lots of opportunity and there's lots of access. The other thing that's changing is education is blossoming. Now, it's It's hard to start a company. It's hard to be an investor, but more and more there are educational programs and resources available. So whichever side of it you're on, you don't have to reinvent the wheel. There's places to learn and start several steps ahead. So I think those are two big changes that I see.
Well, that's great. There's certainly more people playing the startup game, and there's certainly more people investing in them as we go forward. So let's talk about your investment thesis for funding startups. What exactly do you look for, and what is your investment thesis that you take into that pitch room?
Okay, well, it's the same thesis whether I'm in a pitch room for a private investment in an angel setting, or if I'm learning about an enterprise which is already traded on a public market. So first and foremost, I look for IRR, rate of return. So I'm a financially oriented investor. But I have a filter, two filter systems. One, I want to participate in, and will only participate in ventures that I think make the world a better place. So in that sense, I'm an impact investor. I'm actually proud of every investment I've made and every company I've supported. So they don't just make me money, they make the world a better place. Secondly, I want to be involved in innovation, doing something that's new and different. So there is a whole range of investing where you don't advance the state of knowledge or application of the world, but you bring it to your local community. That's completely valid. Every city, state, country, et cetera, needs all of these advances. And there's a whole area of investing which doesn't invent or innovate new stuff, but it brings it into an existing arena or ecosystem that needs it. I'm not so involved in that, but I recognize that there are people who are, and I honor them for it. But for me, IRR filtered by impact and innovation. And when I look for a particular deal, there are really four stages or criteria that have to all align for me to be seriously interested. One, it has to be an important problem or opportunity in the world. Solving it would make the world a better place. Second, it has to be a significant contribution or address to that problem, so I don't just want to nibble around the edges. Thirdly, you always need a superb team, the human beings involved. A good team can pivot and evolve. A bad team, even if they got a great idea, probably isn't going to go anywhere with it. And I will also say that I've had successes, I've had washouts. In every case, the washout has not been because it was a bad idea. It's been because the people didn't perform. So it's really important. And then fourth, I look for the deal, and that's based on a lot of experience. So there are some deal structures and rules that I just don't think will lead to success for the investor or actually the whole enterprise. And so I don't get involved in those, even if they seem quick and easy. So that's my approach to investing.
What kind of deal structures do you avoid?
My preference is to become an equity owner. That, to me, aligns the interests of the investors and the entrepreneurs the best. I win when they win when I win, and we're all pulling for the same thing. Debt is, it has its place in the world, but debt holders and company owners often have different interests, and it's less of a win-win. Sometimes it's a win-lose. And then finally, there are some structures in the world that purport to be easy, and they avoid all the pitfalls and the difficulties. I try to avoid those. And everything has exceptions, but I try to avoid things like safes, which have simple agreement for future equity, or there are several in that ballpark that just are assuming that everything will work out. There's none of the protections that I think good fences make good neighbors, and you want to spell out all the circumstances and the rules ahead of time to avoid disappointment. And if you just go in trusting that everything will work, frequently it doesn't, in my experience.
Well, that's a good point. Safes make it simple, but it leaves out a lot of the protections that usually come with convertible notes and equity agreements for sure.
Right. And even equity notes, it's easier than working out a full term sheet for equity, but you often give up a lot. I don't think the investor's contribution is adequately recognized. But if I'm going to do a note, I will always ask for certain of the features that would be in an actual equity term sheet. to be added to the note or at least provided in what's called a side letter, because I think they're critically important for success as an investor.
Well, what are a couple of those things you see that the note doesn't have that you want to put in the side letter? Just maybe one or two briefly.
Yeah, well, I'll give you three that I will not invest without generally. And just today, I asked for them in a deal that I'm working on. There's a note round, which is pretty advanced. It's convertible. It has a valuation cap, which is reasonable. Never, ever invest in a note that doesn't have a valuation cap. But the three terms that I always look for besides the standard note, one is what's called pro rata participation opportunity, so that when things go forward and the conversion happens and you get equity, you're now going to hold an equity position, you're going to hold stock that should have a term that you can maintain your position in future financings. Because there's an unfortunate rule that the last money in is best money, or the golden rule, which is not the Judeo-Christian do unto others. It's whoever has the gold makes the rules. So the last money in often drives the show and gets the first return. So I think it's critical for an investor to have the right, not the obligation, but the right to participate as a company goes forward and raises future rounds. Secondly, anti-dilution protection is absolutely critical. I would never invest without anti-dilution protection, because without it, you could be washed out and your holding made worthless in a few lines of a pen. And then thirdly, I try to avoid, sometimes I'm in a group which represents a big investor. Sometimes I'm a small investor. I don't like deals where the rights of the big fish and the small fish are different. And so if you ever read deal documentation that has the term major investor in it, be very careful or run the other way, because the major investors have rights and privileges that the minor investors don't. That's not necessary. And in a good family, that's like saying the big kids get rights the small kids don't have. It's not doesn't lead to a harmonious family. And so those are the three things that I always look for in an equity document or in a side letter that could lead to an equity position.
Well, those are good points to have in a term sheet. But to go back to your investment thesis, can you talk about one or two startups that fit that thesis?
Well, every investment I've made, and I've invested in probably 40 or 50 companies now, over 100 rounds, every single one fits those criteria. Industries that I've participated in, probably the biggest single sector, half or more, has been health related. And given my background, I've done some very high tech diagnostics, devices, therapeutics, and that ranges all the way down to very low tech. I have an investment that's still perking along and still earning me money in bathroom plumbing for old people. It's as low tech as you can get, but it's health and well-being of a significant section of the population. So I've done a lot of health related things. Then I've done energy, materials, sustainability stuff. We all know that climate change and energy are big issues in the world today. And it's pretty exciting to be supporting and participating in ventures that could make a meaningful impact on that at the same time as making some serious money. So I really enjoy what I do.
Sounds like it. Sounds like you're having a good time with it as well. The saying among angel investors is they want to do a little good, make a little money, and have a little fun. Sounds like you're doing all three.
And I agree with that, but I would substitute a little for a lot in all categories.
Well, that's great. So you see a lot of startups out there, plenty come through your desk, looking for funding. What do you think the top one or two challenges those startups face in launching their business?
Okay, so the challenges for startups, and we'll get to challenges for investors in a moment. I do see a lot of businesses. I travel extensively. I'm an unusual investor in that I learned during my academic years that we live on one planet. We've only got one planet, and there are smart people and opportunities everywhere across the planet. So I used to work scientifically with people on the other side of the globe, and I invest on the other side of the globe as well as here at home. I travel all the time. I participate in organizations and groups all over the world. And what I'm going to tell you applies whether we're talking about a startup in USA or a startup in Africa or a startup in Europe or anywhere. Biggest challenge I see for entrepreneurs is they have excitement and passion and knowledge that they've got something to work on, but they approach the world from their own eyes and their own enthusiasm. And when they come to me as an investor, they often think, lay out the vision or what they're doing and say, I'm doing this, I need that much money, so will you write a check? What they don't think about is the seeking of financial support is a sales job. It's a marketing effort. And if you're trying to sell something, you have to get into the mind of the customer. You have to understand what their needs are and wants and satisfy those. So rather than telling me about them, that's part of it. I want to know about the good and the service and their qualifications and experience. But I want them to be trying to get to know me and understand if what they do will scratch my itch, satisfy my needs or interests. And that is so rare. So that's a piece of advice I'm always giving to entrepreneurs. Second thing is, entrepreneurs are doing critical work. It's one of the most important jobs in the world, but most of them don't get the financial support that they need. And that always sets up a tension. Governments react to that and programs are developed because a lot of entrepreneurs, probably most entrepreneurs, don't get the financing that they seek. Is that a matter of lack of money? No, it isn't. The world has more money in it sloshing around that doesn't know what to do with itself. So why don't the entrepreneurs get the support that they want? My answer is that they haven't done their homework. They haven't supported their case with the customers that they want to sell to. They haven't talked to investors before they actually come with a pitch. They haven't gone through an incubator or accelerator, which will challenge them in all these critical ways. So when a person just has an idea and they think they're the first one in the world with that idea, they're almost certainly not. Good ideas happen to many people at the same time. And if they haven't done their homework, they get disappointed. If they have done their homework and received the challenges and responded to the challenges and grown because of those challenges, they'll get the money. And in that case, they'll get it in a reasonable period of time. So a disappointed entrepreneur is, in my mind, one who has not done what they should.
I see. Well, and then on the other side, what do you think the challenge is for the investor?
Okay, so I'm going to get up on my soapbox here, and I want to make an analogy. One of the things I've also done in my life besides biomedical research is I've been an aviator, a pilot, and I've been an instructor of pilots. And so I want to make the analogy between flying a plane and being an investor. Now, anybody can learn to fly a plane. That's clear. And anybody can learn to write a check. That's also clear. But consider flying the plane. When you learn to fly a plane, you learn to fly a little egg beater propeller job that burns gasoline, and you can make short hops. Now, why do you do that? Well, one is it can be a lot of fun. Flying with your friend or friends to get a $100 hamburger, we used to say. It's not an economic activity, but it's fun. It can be educational. Future airline pilots of the world and the future astronauts and space engineers got their start by learning how to fly a little egg beater plane. It can be philanthropic. Some people use it for good. They bring patients who need transportation to a hospital or medical center. And that's really worthy humanitarian exercise. Or they might hope to make money. And all the things I've mentioned, they're probably not going to make money. They're expensive. So you can pay for your fun, you can pay for your education, you can pay to be a philanthropist. All those same things apply to being an investor. Most angel investors, the sad truth is they've got education available. It's an art. You don't have to reinvent the wheel. It is fun. It's worthwhile. It's educational, but most angel investors don't take advantage of all those, or they're not professional or disciplined about it. Most angel investors, in the end, lose money. That's just a fact. Speak to any angel group leader or any experienced angel, most angels lose money. Some take it seriously, and a minority are able to make money. So you have to decide what your approach and goal is as an investor. If you want to get together with other smart people your fellow investors, support smart and energetic people, the entrepreneurs, help to make the world a better place, which is going to happen whether you make or lose money, then by all means do it. But if you want to make money, it's very difficult. And recognize that from the start. That to me is the biggest problem. It's the elephant in the tent that we never recognize or talk about. And it's why angel groups are always recruiting new members to replace those that have had the passion and the energy, but after a while, their pocketbook runs dry and they can't make any more investments. This is why. Doesn't have to be that way, but this is the reality of life.
That's very true. The turnover rate is very high among many angel networks as well. So if you solve that problem, that's kudos to you for that, because most have a tremendous turnover ratio. And so
there are two solutions, Paul.
And what are those two solutions?
One is to avail yourself of the education that is available. There are national angel associations all over the world. There are local chapters all over the world. You can learn by doing, but your first 5 or 10 years, regard it as education. It's going to cost a lot of money, but you can learn the art and the science. The other way is if you want to have all those benefits, you want to help improve the world, and you want to make money at the same time, be a passive investor. Invest in a fund, become a limited partner. And that's one of the major cases for the fund that I put together. I really believe in this activity. I believe in the asset class, but I recognize that most people are not going to have the time or the energy to do it in the way it has to be done to be successful. And I'm going to go back again to the analogy with flying an airplane. Investing is also competitive, and you wouldn't go off to war in a single engine propeller plane, because there are going to be jet planes with professional pilots around there too. You're going to get shot down. That has an analogy in investing, because there are professionals in this game. And if you don't get the terms you need or follow through with the life of the deal, which could take 5 years, 10 years, etc., your money's going to disappear and other people are going to make the money.
Very true. Very true. So you see a lot of applications and sectors out there. You're focused on healthcare, but you see many other things. If you had to pick one or two applications or sectors you think are good immediate opportunities for investors to pursue today, what would you call out?
Well, my big two, I would say, are still health and energy. Other people have different enthusiasms. Some people are into gaming. Some people are into applications that run on phones. And that's part of the fun dimension. If an area excites you, if you like to collect postage stamps, well, fine, invest in a postage stamp company. It may not change the world, but if you have fun doing it, by all means.
That's great. You mentioned a while back that climate change was a big factor coming up. What's your thought there?
Well, we're clearly using a ton of energy. We're releasing the heat. I'm not sure it's a reversible process unless most of us disappeared and those of us who still survived went back into caves and wearing bear skins, if there are any bears still to provide skins. So we're going to be living with a more difficult natural environment, is my expectation. But we can try to reduce the rate of this. There are technologies that are developing. Fossil fuels are clearly going to disappear. Everything's going to be electrically powered. The number of opportunities and technologies there are just mind-boggling. And today I was working on 2 opportunities that were in this sector. It can be done. It is being done today. People are making lots of money. Investors are making lots of money, and the world is getting cleaner at the same time. So it's incredibly exciting. We read about the downside, but we can help make a difference.
So let's talk about your advice for people investing in startups. What do you tell them to do before they launch that company?
The investor or the entrepreneur?
Let's start with the entrepreneur. What do you tell the entrepreneur as far as advising them on how to get up and going in this new sector? Okay,
well, the 2 things, and we sort of touched on it before, but the 2 critical things are the entrepreneur will always have an idea, a product, a service, a technology. I would say, first of all, make sure you talk to the potential customers. Who's ready to buy it from you? If you're going to make this magical widget that only excites you and is not going to have a market, it's pointless. So make sure you get data and you talk to actual customers. And best position to be in is even to have some beta customers or actual customers to demonstrate this traction that the market has an appetite for. Second thing I tell people is you got to form a team. Nobody can do everything by themselves. I don't care what activity or where it is. You got to have a team. And so you'll have a CEO, you'll have a technology person, you have a marketing person, et cetera, a finance person. One of the people you need on your team, or one of the skill sets, is people who have done this before as investors. They know what the bumps in the road are going to be. They have connections, they have insights, they have war stories, for good or bad. They're mentors. They're not only check writers, they are experienced mentors for your team. So make sure you talk to and then have them as on your team. They'll save you an awful lot of grief.
Great. Then on the other side of that table, what's your advice for people investing in startups?
First of all, don't do it by yourself. In the same way, nobody is smart enough. So the two practical routes that I see, one is join, learn from, and work with an organized angel or investing group. And there's lots of flavors, but be humble and treat it as a learning experience. That's one way. If you want to be an active investor or really learn the ropes, understanding the field. If you don't have the time and energy to put into it, but you still want the asset class and the financial gains, by all means, put your money into a fund, become a limited partner. You're still going to learn. You're going to get better financial results. And automobile maintenance or aviation, transportation. We don't all learn to fly, buy a plane, and then move ourselves around the planet. We use airlines and professional pilots. We don't maintain our own cars. We take it to a garage. Same thing with investing. If you want to do it yourself, anybody can learn those skills. But if you don't have the time or the energy to do it, then by all means, we all have a car, but we go to a garage. We should have representation in this asset class, become a limited partner in a fund. And I believe that 19 out of 20 investors should probably do it that way.
Well, you certainly get more diversification with a fund, and you do get a lot more support in coming at it as well. And most often that's worth the fee you pay for it as well. So it's probably a good idea to be in a fund for many different areas of startup investing.
Now, remember that the fund only in the end takes money from you if you've made money. As an individual, you can lose everything you've got, and then it's all gone. A fund isn't going to take anything unless it makes you money. So I think it's penny wise, pound foolish not to go that way for most people. But there are exceptions, people who really like to get their hands dirty. They work on their own cars. And same thing with investing.
Well, great. Well, in the last few minutes that we have here today, what else should we cover that we haven't?
I'm going to just mention one thing. I told you that I invest in all different mechanisms, and I've had excellent returns from everything from public markets to private opportunities. I've also had serious losses from all of them. Young companies are young companies, whatever the financing arena. But I did want to mention the access issue. I was in the movement that helped establish crowdfunding as a viable financing mechanism for entrepreneurs and investment mechanism for investors. That happened in the 2014 Jobs Act, JOBS, that was signed in the Obama years. When we enacted that, we were cautious and there were conflicting opinions. And so it was enacted with a whole lot of cautions that really compromised the capabilities and success of the field. That has changed within the last 24 hours. The SEC has proposed and published a whole bunch of rule changes that are going to make crowdfunding far more important and effective for both entrepreneurs and investors who might not be as wealthy to have access to all of the private deals that angels and VCs have access to. So truly going forward, anybody can participate in this asset class through the public markets because there are young companies bought and sold publicly every day, and through crowdfunding. It's now no longer the province of the wealthy few. I think that's really exciting.
Well, I agree. I think crowdfunding really takes it out to a broader group of people, enacts more funding for the startups that come in. And a lot of advantages that accrue to the angel investor include things like product validation, market validation. You can get so much more information after they go through a crowdfunding campaign than if you don't. So it's a great way to have a group get ready before they go to the angel investor, is to run a crowdfunding campaign. But it's great to see the rules change as well.
Yeah, well, you're thinking about the first kind of crowdfunding like Kickstarter, which was not investing, it was marketing, online marketing, basically.
No, I'm talking about equity investing too. If you can go out and get a broad group of people to support you at a lower level, then now they were limited to $1 million. And so you can only get so much money from that. But that was just another validation point. Kickstarter was validation too, but it was very limited validation. Can I make this product? Can somebody put some dollars on the table? But then if you can draw your circle wider of friends and the general wisdom of the crowds coming in up to $1 million, that was interesting as well to figure out if that's a good thing. Because as an angel investor, you're looking for as many validation points as you can. And crowdfunding was bringing more of those validation points coming up as well. If you can't get the crowd to putting money into it, why should I put money into it? So lots of good questions came out of those crowdfunding campaigns.
Well, that $1 million that you cite is now going to 5 million for one of the 7 kinds of crowdfunding that's called Regulation CF crowdfunding. It's a particular set of rules. There are 7 kinds of crowdfunding that I distinguish and I've written about, but we're talking about the crowdfunding for everyone to become an equity owner in a company. So that 1 million is now going to 5, which is very exciting. The other thing I just wanted to mention is we talk about angel investors, and it used to be that angel investors, first you got the family, friends, founders, fools, 3 Fs or 4 Fs, crowd, and then you get angel investors, and they get VCs, they get private equity and the banks and all that. That progression is broken down now. So some VCs work very early, some angels can buy entire companies or countries. So the important distinction now is you're an angel investor if you invest your personal money in a deal. You're a VC if you invest other people's money in a deal. It's not the size of the stage anymore. It's whose money is being invested.
It's certainly a new world there for sure. So how best for listeners to get back in touch with you?
Okay, well, I'll spell out my email address, my first initial and my last name. So CSIDMAN at ECS-partners.com. So that's the best way.
Great. We'll put that in the show notes. Good spelling there. We'll make sure we spell it correctly as well. And for those who want to get back in touch with you, they'll be able to pick that up off the show notes too. I want to thank you for joining us today and hope to have you back for a follow-up soon.
Well, that would be a pleasure. Thank you very much, Hall.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Alti Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinions of Investor Connect. This podcast is for informational purposes only and should not be relied upon for the basis of investment decisions.